You're listening to the Good Food CFO podcast, where we challenge the status quo of the food industry, celebrate good food founders who are building businesses on their own terms, introduce industry disruptors, and are redefining equitability. If you're ready to build your financial confidence and join the good food revolution to change the way the food industry does business, you are in the right place. I'm the Good Food CFO and your host, Sarah Delavan. A few months back, we asked what type of episodes you wanted to hear. And as the founders of growing food businesses, you wanted to learn more about access to capital that doesn't require giving up equity, doesn't involve traditional banking and loans, and doesn't come with huge interest rates and repayment schedules. Well, you asked and we listened. Today on the podcast, I am joined by Jackie Chan. She's the Chief Operating Officer and co-founder of SMBX, the small business bond marketplace that connects qualified U.S. small and medium businesses with people in their communities who want to invest in them. If SMBX sounds familiar, it may be because Emily of Boychik Bagel shared her experience issuing bonds and raising $1 million on the platform. It was SMBX's largest raise to date. Jackie is sharing what exactly the SMBX model is and how it works, how it compares to other funding methods, how small business bonds benefit both the business and the community of investors, and what the process of working with SMBX looks like. Let's get to it. Jackie, welcome to the podcast.
Thanks, Sarah. Thanks for having me.
So excited to talk with you today. We had Emily from Boychik Bagel on the podcast not too long ago, and she was talking about SMBX, and so many members of our audience and our community were interested in learning more. So I'm just beyond excited to have you here and to talk more about what SMBX is, why you founded the company, and how you're helping small businesses. So as I mentioned in the intro, you're the COO and you're one of the founders of the organization. Can you share a little bit about your why and your mission and sort of, what you're doing to help small businesses?
Yeah, absolutely. Thanks for that, Sarah. We came together probably about 5.5 years ago, the co-founders. And we had an idea around how do we actually give access to capital to more people out there? And we were looking at the time, this is, right in the beginning of crowdfunding. And a lot of the business models that we saw out there were very much based on equity crowdfunding kind of models. And we kind of looked at, like, hey, is that going to really work by, sure, they're helping a lot of startups raise capital, but then the thing that we saw was a lot of these companies have to give away a lot of equity. So our mission was, well, how do we offer more access to capital without letting people lose out on their own equity, but then also be able to, generate wealth creation locally by, not just helping the actual small businesses who are raising, but then really creating wealth within the community. So again, about 5.5 years ago, we kind of came together as co-founders, myself, Benjamin Lozano, and our CTO, Bhavish Balhotra. We kind of came together with an idea like, well, why don't we create a debt-based type of product instead of an equity-based product where basically they're coming to our platform using the crowdfunding method and actually really raising capital through the community. And then by doing that, they're not losing any equity, they're not losing anything around their business. And then at the same time, what ends up happening is investors that actually invest in these companies comes to our platform and then they're basically, earning principal and interest back on a monthly basis. So to us, that was about wealth creation for the investor side too. So I guess our mentality was really always from the start, a two-sided marketplace, not a one-sided marketplace, but a two-sided marketplace where you're helping, again, connect small businesses with investors who want to invest in them.
Yeah. So SMBX is a funding portal. And what I think many people may be asking is like, how is this possible? Or, is this regulated and sort of how does it all work? So can you tell us a little bit about, so I guess, the structure
Yes.
of the company and how it all works?
Yeah, absolutely. So you're spot on. SMBX is a regulated funding portal. We are regulated by the SEC and FINRA through the 2012 Jobs Act. We're a two-sided marketplace. Issuers will come onto our platform, and obviously they go through due diligence and an underwriting process, right? They don't, we're not qualifying everybody that comes on to the platform immediately. We would go through due diligence, ensuring that they qualify and that they're able to service the actual loans themselves. So they do a little bit of that. Once they kind of come on board and they're qualified to actually raise with us on our platform, we list them on a portal. They get listed and filed with the SEC at the same time. Is almost like a public offering of sorts. I kind of liken it to, because we have the product called the small business bond. Essentially, issuers come to our platform, they issue small business bonds instead of taking out a loan from a bank. They issue securities out to people who want to invest in them in $10 increments. So I kind of, half joked around, like, because it's a public offering, so to speak, instead of an initial public offering, an IPO, I call it an IBO, an initial bond offering. So technically they're becoming, essentially the big, almost like to a big corporate like an Apple or Google that goes out and raises capital through, issuing bonds, corporate bonds, right? Instead, now, with the Jobs Act of 2012, they're able to go out there and really raise capital through the same methods that every single corporation would be able to do, and raise capital by issuing securities out there.
Yeah, I find this so fascinating. Well, I want to kind of pull back a little bit because you mentioned, crowdfunding and sort of equity funding, right? There are multiple ways that people can raise money for their small businesses. And I want to sort of lay it out there for folks. Like, what is the difference between, a GoFundMe and different types of crowdfunding versus what SMBX is doing, so that everyone kind of understands, I guess, what the options are and specifically what we're talking about here today.
Sure, no problem. Yes, you're right. There's many different modes of crowdfunding, everything from donation-based type of, crowdfunding portals such as Kickstarter or GoFundMe, where literally you kind of come in and, if you look at the different things that you would be able to donate to, it would be, for instance, in Kickstarter, it'll be a lot of new startups, but you won't get anything from that. It'll be just based on donations of what you might want to fund that particular, startup. But Kickstarter also will, some of them will maybe give you a free t-shirt or a free prototype when they finally build out the product itself. So you may get a little bit of something, but you're not going to get real, true returns. GoFundMe would be absolutely, I'm sure everybody's aware, but you go there and there's a lot of campaigns that are more on the personal level type of campaigns where people are asking for donations for XX, reasons. A lot of people are able to raise capital through there as well, but those are more from a personal donation perspective, like I mentioned. Where we kind of come in is the cusp between what are some of our competitors, which are mostly equity crowdfunding portals. What they do is they go and fund startups as well. So they'll go in, they'll fund a bunch of startups, but then, and what you're basically buying into or investing into is a piece of their company. So yes, while you get a piece of equity in that particular business, that business also loses equity in themselves, right? And a lot of small businesses may not want to do that. I know that, we've been underwriting and we've been around for about 3 years now. A lot of businesses come to us. The reason why they're interested is because our model, which is a debt-based model, is different because they don't need to give away equity. Yeah. So maybe to kind of recap, the way we issue it is, instead of going out to a bank to get a traditional loan, for instance, right? What they do is they come to SMBX, they obviously issue the, like I mentioned, the small business bond product. These are sold in increments of $10 per bond. Every security is worth $10. And we've kind of created and engineered this product to kind of almost mirror a term loan of sorts. So what happens is the issuer comes to our platform. They say, hey, I want to raise $100,000. We underwrite them. We go through a due diligence process. We qualify them for a certain loan and a yield. And then basically they go out to the crowd to go and raise that actual capital themselves. So by doing that, the businesses basically don't, they keep 100% of their ownership. They're just paying a fixed rate loan on a monthly basis that includes both principal and interest. And the one thing good about a term loan is that it does amortize over time. So as they pay off their loan every single month, that principal keeps coming down. So every month they're actually paying less interest over time. So that's one thing that we found was very compelling. A lot of our issuers like that. They don't like to, necessarily want to do balloon loans where, they pay interest up front, but then the principal never amortizes down. And therefore, at the very end, they all of a sudden have to pay this big debt off, which kind of scares people. Whereas us, we make it very manageable, fixed payments every single month. And, people can then manage their money better as a business.
Yeah. For someone listening who's thinking, this is amazing as I am, and I think it's such a great option, great tool. And as you said at the top of the episode, it's really benefiting both the small business and the community, right? Because they're investing and they're both sort of getting a cash reward, if you will, as being a member of SMBX on either side. When a small business owner comes to you and you do your due diligence and you do the underwriting, can you provide a little bit of insight into the types of information someone should have prepared when they approach SMBX? And then if you could also share a little bit about how you determine, or if you determine the max that can be raised and the interest rate that the business can offer to their investors.
Sure. I can definitely do that. I guess from a general qualification process, regulation crowdfunding, which is the regulations that we actually work under, they do have some minimum requirements that they actually do ask of actual issuers. So for instance, they must be a US registered entity. In actual corporations, either a limited liability company or a corporation. So that's number one. They need to have at least 6 months of operating history, meaning, especially in our case for debt-based instruments, they need to have some sort of revenue generating, right? Otherwise, how would they actually pay off the loans, right? So we do look at that very carefully around making sure that people have been around for at least 6 months to a year is usually our general requirements. If they have it, we would look at the last 2 years of financial statements and taxes. And that is probably part of mostly the actual due diligence process, where we look at, obviously a business's trends. How are they trending? Are they making money? Are they generating more revenue? Are they declining in revenue? So we look at all the different things. We also look at things like liabilities, right? Like, do they have other debts that they have to pay off? And if that is, like, what is that? All this is really just to kind of understand, the number one, the business itself, how they're doing. More importantly, because we have a fiduciary duty to the other side of the marketplace, which are our investors, is that we qualify people that we believe that has, number one, the right business model, the right business, but then also a company that we believe will be able to service their debt over the, the time frame of the actual loans.
Yeah.
And then lastly, as a last qualification, they must pass background checks, right? So we do have a background check process where we will disqualify people, unfortunately, for people with felonies and financial crimes and things like that. If business owners also have a history of repeated defaults or liens and things like that, that's kind of like red flags as well. So there's a few things that we kind of look at. Obviously, there's other elements. The underwriting process does look at a lot of different things that potentially banks don't. I think banks, what they do is they look at financials and they look at credit scores. So the minute they do that, like a lot of times people are just disqualified, like almost instantaneously. What we kind of look at is other subjective kind of stuff as well, not just the pure numbers and numerics. So one thing different from us and banks, for instance, is that we don't look at credit scores unless that we actually look at to see, hey, they're right at the cusp, and we're trying to figure out, they have some debt. It doesn't look like it's been paid off that much. We want to be able to look at personal credit just to see where they are as an individual business owner, right? Do they have a history of breaking their payments on their personal side? Because that really is very telling of whether or not a business owner will be able to perform on their actual business loans. So we may look at that from a, additional kind of supplementary information, but we don't look at that. So there will be people that might have lower credit scores, and that's okay, as long as their business is actually, successful and they're actually doing everything that they need to do from that to run their business right. So we do kind of look at that a little bit differently than banks. And the other thing that we don't do is we don't take personal guarantees. So I know that a lot of SBA banks out there, they'll put a lien on all your business assets, and that's the first thing they do. And a lot of them will take personal guarantees too. They'll put a lien on your house and a lien on your personal property, which is a major turnoff to a lot of business owners as well, because that doesn't really help them with access to capital if they feel like they're limited to, oh my God, I have to be super successful. And if I don't become successful, they may come and take my house, right? So there's that added pressure around that that we don't do. So like I said, we look at businesses very diligently around their business model, their future projections, what they plan to use the money for, and then ultimately whether they can service a debt. So we do look at a lot of those.
Yeah, it's so interesting. And it makes me happy that it's not just the standard, like what's your credit score and how much money, how much money are you bringing in right now? You know what I mean? There's those very very limited view of what a fundable business is, or the view of who can get a loan and who can't. And I think especially with small businesses, it's important to take a deeper look and to understand the nuance of what's happening within this business and kind of what's going on here and what have the trends been and what are they projected to be. I think that's so interesting. And I think what you said about personal guarantees is so important, because there's this myth, or maybe misunderstanding is a better term, that if I have an LLC, I'm protected. But when when you're asked by a bank to sign a personal guarantee, you're essentially saying, I will take responsibility as an individual for this loan, regardless of whether my company is an S Corp, an LLC, right? So that doesn't matter once you sign that paper. So really kind of important piece of information. And in today's day and age, right? I don't own a home. I know a lot of people my age, I'm 41 years old, right? We live in a big city. Houses are very expensive. We're choosing not to invest our money there. So what do I have that can have a lien put against it that limits my ability, right, to get certain types of loans, which I think is also an important thing to mention,
No, absolutely. So, like I said earlier, the main part of our mission, there's, really two parts, is access to capital. And when I say access to capital, it means literally, what are we doing that's different? Basically, trying not to limit people to raise capital through the means that we've actually, obviously engineered. And then the second thing is really keeping wealth creation within the communities, right? Those are probably the two biggest things that we're, as SMBX, we're focused on. So yes, while, we, like I said, we don't qualify certain businesses to come in, not every business will qualify. And that's because we have like I said, a duty to protect the investor side, right? We don't want people to go into default. We want to make sure that, they're actually going to make the payments and make them soundly. But then also the other side, like I said, is about wealth creation. Well, if you kind of think about it, how does it sort of benefit an investor? So the way we kind of think about it is, if, instead of leaving, your money in a almost near zero interest bank account in some of the bigger banks, obviously some of the other smaller ones may offer higher interest rates, but I would say most general, big banks out there will offer less than 1% in terms of your interest earned on your savings and so forth. The way we're kind of thinking about it is, over time, as people so-called invest and diversify the portfolio, we're not asking people to throw their money all in one business, for instance. We're saying, hey, take a look at our business bonds, invest in businesses that you guys believe in. Don't park your money in a bank. And at the same time, so what happens is, as they're investing, they're getting monthly interest and principal and interest payback every single month. Over time, if they reinvest that, there's compound interest effect. They come in and all of a sudden, they were originally earning maybe 7-8% probably about a year ago when interest rates were low. And now, if you look at our portfolio of bonds that are listed, they're probably up to about 11.5. So over time, as people keep reinvesting and reinvesting those funds, they're actually compounding their actual growth. So that kind of hopefully teaches, both the older generations that already know this, but then maybe the younger ones coming in, is that, hey, guess what? Compound interest over time is going to really build equity in your own way. And you're actually, kind of regenerating and creating wealth within that own way. So that's basically how we're seeing it, is like, we're keeping investments and wealth creation local, to communities. And obviously not just only the communities invest in it, but nationally, a lot of communities invest in some of the other bonds as well. But I would say that's always been the vision. And I think it's working. It's definitely working. We have some, you mentioned Wojciech Bagels earlier in the podcast. That was a really great, amazing offering that we had. That literally just took off. And they raised obviously about 1.1 million. And then going there, they're based in the Bay Area, so had the luxury of visiting Emily after their Palo Alto store opened. Crazy. They had lines out the door, and they're using our funding, and now they're using it for building out another storefront in South Bay. So very excited for them.
Yeah, I think the small barrier to entry with $10 bonds is really amazing.
Mm-hmm.
And also the ability, I was talking to someone yesterday who owns an independent grocery store, and he was talking about the importance of community and how for him, service and connection with the people shopping in his store sort of breeds community, because your current customers tell their friends and their family, and your community starts to grow. And I think when you are able to financially invest, not just to purchase from this company that you believe in, but to say, I want you to be here in the long term. I want you to succeed. I want you to become a potentially larger part of this community that I either live in or greater community that I'm a part of. There's so much power in that. Like, I'm having a hard time putting it into words, but I know that having my money invested in Wojciech, for example, would get me in the store every weekend, would get me telling all my friends about it, right? Because I own a little bit of this, right? I have ownership in that. And I just think that that's such a powerful opportunity for the individual and for the business owner, as you've already said. But it's really an exciting and I think unique opportunity.
Mm-hmm. Absolutely. Not only getting, people to go out to those businesses more often, especially the retail brick and mortar ones, right? Obviously, you can see it and feel it, and there's a physical connection. I would say that by keeping a business there that you actually love and you believe in, you're helping basically the small businesses in your area grow and flourish. Yeah. And I think that's really important, especially in the last couple of years, right? We've seen a lot of companies and small businesses go out of business, and it's really sad to see that. Even like, I recently was like talking to some small businesses in our community that, they're James Beard Awards and Michelin star restaurants, but yet they're kind of contemplating closure as well. Yeah. It's not that they didn't survive the pandemic; they absolutely did. But they're not getting back on track as quickly as they would like. So having said that, like I do believe that there's a lot of really responsible and thoughtful people in the communities that actually want to help, but they may not want to just donate money. Like I think in the early days of the pandemic, they used to go buy some coupons or gift cards, so to speak, ahead of time so that they can actually help keep somebody in business. Yeah. But then I would say in this case, not only are they helping them grow, because that's technically where most of the issuers that come to raise with us, right? They're really coming here to grow their business, right? Whether it's to go generate some more additional marketing or grow, build out a new brick and mortar because they were in some garage or something like that. Now they're willing to come out and open a new store because it's been so successful. So whatever the case is, I do believe that that community bond is there. And then lastly, maybe just one other thing to mention is, while they're raising on the SMBX, yes, we do kind of expect that some of the issuers kind of come on board and help activate their community, meaning, do some social media posts for us if they have a social media following. at least advertise the campaign a little bit. But from our end, we do a lot of that work for them, right? We help come up with an entire marketing and advertising plan for them that actually says, hey, on day one, you should do this. On day two, you should do this, and so forth. So throughout the entire offering, we're really helping build out their marketing and giving them really good insight on how to better, basically market their business. And over time, from what we've seen is that a lot of the businesses, especially with, like I said, retail brick and mortar, they were because of the marketing, media focus, and the public relations that we've kind of gotten out for them, all of a sudden they're getting more business. Overall, like it seems like their businesses have actually gotten even more people coming through, because not only are they now invested in your company, but they're hearing about you that they might have not heard about just because they see some of the things that we actually do for them.
Yeah.
So,
What are the fees associated with being on SMBX and doing a raise or issuing bonds on SMBX?
Yeah, no problem. So on the issuer side, we do have a fixed origination fee, like one price, for the entire thing, 4.5% of what you raise. So what we do for the issuers is, a few things, right? We obviously walk them through the entire process. We do all the filings. We create all the documentation that's required from the SEC side of things, and we do the filings for them. So we create something called bond prospectus and something that's called a Form C that we actually kind of create. All they need to do is review and sign. So we take all their information around some of the financials as well, and we'll basically paint a picture of where the actual issuer kind of currently stands and what they're using the money for. So that's one aspect of it. The other aspect is the marketing side. So that is also part of the 4.5% fixed origination fee. We come back with an actual marketing plan for the actual issuers themselves. So our marketing team will come in, they'll talk to you, they'll understand, what you want from a business perspective or brand perspective. They'll come back with an actual marketing plan for you. In some cases, where issuers want to do their own, of course, we'll let them do their own social media. But if they don't, we can create all that type of content for them. And we'll create all the assets that they might need, to be able to post around their offerings. We'll do that. We'll ship it out to them. So they almost get like a little marketing package, so to speak, at the end of it. And then as long as they're able to kind of go through and walk through, the actual marketing package and we don't ask for them to do every one of those things, but we would say, hey, to be successful, you might have to do at least a few of these things. And if they do, then usually that kind of works out. Throughout the offering itself, like let's just say that it's like, up for about 30 days or 45 days, the market team will kind of have touch base points and say, hey, we noticed that by you doing this, you generated X type of, investments over to your account. It looks like that's working better than some of these other methods. So why don't we focus on that? So they'll tweak it along the way, and it's very customized and personalized. So I think on just to address the other side of the marketplace super quick, there's no fees for anybody to invest. Anybody with a US-based bank account or credit card can come on, sign on to the SMBX. Obviously, we have an onboarding process where we do make sure that it's a real person, it's not fraud. So we do a little bit of due diligence around that. So we'll ask you to kind of go through an onboarding process where you might have to upload your ID and take a selfie shot so we know that you're the real person. And then we basically connect your bank account and you're ready to go. And you can start at $10 increments. Like I said, you can buy one bond or you can buy 10 bonds or 100 bonds. So it's pretty low barrier entry, like you mentioned.
Yeah. How many businesses have you supported in this process over your 3 years?
Yeah, so we just hit our 100 business toward the end of last year. So it was a big number. We launched during the pandemic in 2020. So obviously that was a little slower. But then over the last 2 years, we've significantly, quadrupled in size in terms of offerings. Last year was a great year. In total, 3 years to date, we've over 100 businesses and, growing very, very strongly in the first quarter. This has only been like 27 days into January, but we've had some really strong closes. Lots of new business will be listing. So it'll be exciting.
That's really exciting. And I think, with talk of recession and rising interest rates and, all of the things going on economically, the opportunity to invest in such a liquid asset, I think is really great, right? Your return on investment starts coming in monthly, right? You're not waiting a long time to see your return. It's getting deposited into your bank account, from what I understand, right? On a monthly basis, which is really exciting. And as you said, if you need that money, to live your life, you can take that, or you can reinvest it into another business or into that same business, perhaps in SMBX, and have that compound interest and the portfolio that is growing, which I think is a really exciting opportunity and much more enticing than the type of funding where it's a gift or a donation, or where you've got to wait a long time to see that return on investment, because I think it's difficult for many people who want to invest in their communities and in the businesses, to do so. So just really, really, really cool. One of the questions I have for you is, so you said raises are usually like 30 to 45 days, let's say. 4.5% goes to SMBX for their support and the due diligence process. Then does the money get deposited into the small business's bank account? Just, do you have a little insight into sort of what happens after a raise is over?
Yeah, absolutely. So what we do is, we make sure that everything's, done very tight and neat. So what happens during the fundraise process is that we have an escrow agent manage that money for us. So as people are crowdfunding and raising the money, and, we're basically waiting for an offering to fill, right? So let's just say that over time, say a course of 30 days or something like that, you're raising, $1,000 today and then so forth. All that capital is being built and actually managed through an escrow account. So nobody touches it. SMBX doesn't touch it. It's safeguarded for the issuers themselves. So at the end of the raise itself, if they've hit their minimum, then we will close the actual offering. And then there will be a short reconciliation that needs to be done, obviously between SMBX to ensure that, hey, everybody that's actually invested will get allocated a set of bonds and, the securities. The escrow agent will do a reconciliation, have all these settled. Are all the people that actually purchased these actually, qualify? They pass KYC, AML, and all that good stuff. So they'll do a short reconciliation on their end as well. And basically, at the end of that process, between close and a short reconciliation and the time that they get the money, it's probably about 1 to 2 weeks after it closes. Is probably the timeline. And yes, it does actually get deposited straight into the bank account that they provide to us. And we wire that money same day. At the same time, the day that, the money gets wired out, we issue the bonds out to the investors. They get a nice little bond certificate that says, now you own, $10 in X. They'll put that in their portfolio as well. And then a month later, the first bond repayment will happen. And then every single subsequent month after that, we basically just auto debit the actual account of the issuer. And yeah, that's how it works. And then the money that we auto debit and actually take out from a payment perspective from the issuer, again, sits in a nice little escrow account on behalf of investors, at which point when they want to withdraw the money at any point, they can go and just make a withdrawal. Kind of similar to, like a PayPal or a Venmo model, where you kind of get paid and then it sits there, you can withdraw at any time. So it's the same thing.
That's great. And you had mentioned it, but I want to kind of recap on the fact that it's a sort of fixed monthly payment that gets deducted from the business's bank account. So assuming at the end of the raise, it's determined you've earned this much. This is how many bonds you've issued. So this is the monthly interest that will get paid plus, principal. And so it's a fixed amount. And I think that that's super helpful for a lot of business owners as well. Something we didn't talk about as a form of funding, which I think a lot of people took advantage of, particularly in 2020, was that I can't think of what it's called, but essentially like Shopify offers them, QuickBooks offers them, Stripe offers them. And it's like, here's, you can have $10,000, you can have $15,000, and we're just going to take it out of your income that you run through this platform. The interest rates are really high, right? The amount of money that gets taken from you each month varies and depends on how much you earn. So they are tricky. They cost a lot of money. I hope that people are sort of moving away from them, but it felt like a way to get, a quick injection of cash. And it's an alternative that many people still take advantage of. And I think something like this, if you're really, in it for the long haul, and, you have a good community that you can connect with and reach out to, I think that this is really such a great option, and definitely in comparison.
Definitely. We really do look at the interest rates, and we kind of look at what the market conditions are, right? What can people get from an SBA loan out there right now? Obviously, our interest rates have gone up a little bit because, the Fed raised rates 7 times last year, but we've never raised it as aggressively as a lot of banks are raising. And with that mindset in mind, we're like, okay, we're going to have to raise some rates here because, again, there's a other side of the marketplace. They're going to say, well, my investment can go somewhere else that can earn higher interest rate. So there has to be a little bit of a comparable, increase over on the other side too. But we also know that we don't want to be those, very aggressive type of companies out there that are charging 15 to 25% in interest rate either. That's not who we want to be. That's not about getting people access to capital. So it's, we've been very competitive with the rates. And maybe I didn't dive into this a little bit earlier, but the way we kind of look at underwriting is this: the more qualified and less risky of a company you are, meaning you're, much more established, and you may, maybe have a better financials to kind of prove that out. The lower risk you are, the lower the interest rate you pay. The higher risk the company is, then potentially you might pay a little bit higher. And that kind of goes with the investment itself, right, on the other side. So the investor will see like, okay, yeah, I can earn 11.5% on this, but what does that actually mean? Does that mean that this investment may be a little bit slightly riskier than somebody's that's raising at 9%? That is what we're basically saying. That's why you're seeing, the different types of yields there. Granted, some of them, were qualified probably a little bit earlier as well, when interest rates didn't raise like two more times in like November and December. But then the thing is, I would say that in general, that's kind of the way we do it. We risk rate. We give people a feel. Right now, I think the cap is around 11.5% is where we're capped at. We're probably not going to go beyond that, not for the foreseeable future. I do feel that in some ways, interest rates will kind of come back down at some point. The market is slowly showing signs of recovery. And I do think that that's important. And that's something that I look at, constantly, is where is the market happening? What are our competitors in the SBA loan market offering? And kind of remaining with that competitive edge is what we're looking at. Basically giving and offering the best rates possible where we can to issuers as well. That's one of the main things.
Well, is there anything else you think is important to share with our listeners about SMBX or the process, or just anything extra you want to share with us?
I think maybe the last thing to kind of just say is that I believe in, like, I kind of mentioned personalization, customization. We are here to talk and work through structures with businesses to ensure that it works for them. I think is really critical that we actually do that. We want to make sure that, hey, number one is the amount that they want to raise, right? Because I'll have to say, sometimes they might come with some, higher than normal amount. There's like, I want to raise 5 million. It's like, right. Okay, but your financials may not qualify you for that. But then we'll kind of work with them, say, okay, what is it that you really minimally need? And maybe over time, if you can showcase, number one, see if there's momentum in your offering itself. Maybe we can start out at a lower amount, and over time we can maybe raise a couple of raises, because you're basically able to raise up to 5 million within a 12-month period, right? So the way we kind of see it is we come back and we work with the actual issuer. We customize and structure loans that works for them. And then we want to make sure that, they're going to be paying back their community, their investors, right? So I think that's really equally important. So that's probably the one thing that I would say is a little bit different than like a bank or even our competitors, is the fact that we really believe in a concierge service approach in everything we do, from the time that they talk to our, account executive, all the way down to talking to our operations onboarding person, all the way down to talking to our marketing people. It's about the business itself and how do we actually best help support them.
Yeah, it's so great. Well, share with us where people can learn more about SMBX and any kind of social media handles and things you might want to share?
Sure. Well, our website is www.thesmbx.com. There's an FAQ section there. There's a learning section there. There's videos to watch. So, we obviously have information there for the small businesses. They'll tell you exactly what you need, what kind of qualifications that we'll be looking for. And there are forms to kind of fill out if you're interested. And then on the investor side, there's, an entire section that talks about the benefits of coming on board. There's an onboarding videos to help you walk through the process, et cetera. From the investor perspective, we also have a support team, in case investors themselves may need a little bit of a helping hand getting onto our system. Because technology is not their strongest suit. We do have somebody that can call you up and help walk you through the process as well. So along with videos, along with FAQs, along with a lot of that stuff we have online, we can also call you up and give that extra support if you need.
Yeah. Another question just popped into my head. Are there limitations to how many businesses SMBX can work with at one time? For example, we only offer, only list so many offerings a week or a month or something like that.
No, there's no cap on that. We basically list them as they come. Obviously, from a timing perspective, it has to work with the issuers themselves. We, like I said, that customization really does kind of come into play. For instance, I know that in December, it was, obviously a little bit slow just because we get it. It's the holidays, right? So people go, hey, I want to push that out to January. We're like, great, we'll work with the schedule that you want to raise with us. Because at the time, just think about it, for the 30 to 45 days or it could even go out a little bit longer if you're raising a large amount. You're going to have to be kind of invested in the actual offerings themselves, right? You're going to have to pay attention. So we want to make sure that during that time, the issuers will have the bandwidth to be able to oversee their actual offering, even though we do most of the legwork for them. But like I said, there's a plan for them. Say, hey, maybe on the 15th day, maybe you can go do this, and in the 25th day, go do this, and we do the rest, right? So, and then during that time, if we're able to get the media coverage, they might have to go on an interview on TV. They might have to, do certain things like that. So we want to make sure that they're available for that.
That's great.
Mm-hmm.
I love that. I mean, I just, the support and just the concept, I think just what you're doing is so great. A lot of what we talk about here is how can we do things differently, particularly inside the food industry. And, the majority of our listeners are founders of, food brands that are community driven, mission driven, sustainability driven, and traditional funding and traditional pathways to funding aren't available to them for some of the reasons that you talked about. They don't want to give away equity in their business. They want to maintain ownership. They want to have complete control of the decision making. But food in particular is an expensive endeavor. It takes a lot of investment, a lot of funding, even if it's your credit cards, your personal bank account, right? Issuing bonds on SMBX, whatever it is, it's capital intensive to produce your product, to wait 30, 60, 90 days to get payment, right? To set up the infrastructure. So having new innovative ways to raise money, I think is so needed. And I just think what you're doing is really exciting. I know that our community is really excited about what you are doing. And I would love to invite you or someone from your team to a Q&A inside of our community, if you're open to it, just to answer some questions that people may have as a follow-up to this episode. I think it could be really awesome.
Yeah, absolutely. I'm game. I'm sure Peter and some other folks would be game as well. Absolutely.
Awesome.
We just did a Portland in-person event for a lot of business owners, and it was just that. It was literally Q&A, giving people an understanding of what this is all about and so forth. So I'm happy to do that. We can do it virtually. We can do it in person if needed. Yeah, absolutely.
Amazing. Well, if you're listening, stay tuned and we'll put details, dates, and times inside of the community where Jackie and maybe others from the SMBX team can join us. This has been delightful and really enlightening and educational, and I appreciate you and your time. So thank you so much for joining me here today.
Thank you so much, Sarah. Thanks for the inquisitive questions. We really appreciate it. Hope to see you guys soon.
You as well. Do you have questions for Jackie and the SMBX team? Good Food CFO Plus and Good Food Revolutionary members can join us for this and future live Q&A sessions, as well as get access to exclusive podcast bonus content and attend live podcast recordings. There's a link in the show notes, or you can visit join.thegoodfoodcfo.com to become a monthly or annual member today. As always, I am so grateful to have spent time with you here. If you enjoyed this episode, found it helpful or inspiring in any way, please share it with your founder friends on social and consider rating and reviewing the podcast wherever you listen. It's the #1 way to help more good food founders find the show. I'll be back with a brand new episode in 2 weeks.